Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. I think this is a great time to be an ape. You're probably thinking Uncle Frank has finally lost it. He's been praying for swans so long, he finally knocked a screw loose. No, not at all. Let me explain. In many cases, the most dangerous opponent you can face is one that has nothing to lose. Many apes have arrived at that state of mind, meaning there's no way I'm selling down here. I'd rather lose it all than sell down here and help these Wall Street pigs cover and close their trades. Well, I don't know about you. I'm not a financial advisor, and this is not financial advice. But I plan on fighting Wall Street and Adam Aron until they're all dead. It's one thing to cheat and steal from me, but they also screwed my family, my friends, and let's not forget my subscribers. So it's on like Donkey Kong forever. Never forget, they had to cheat to beat us. They have every imaginable advantage in the world, and they still had to cheat to win. And why? So Kenny could buy another $100 million painting during the pandemic? Have you ever heard the expression, a cornered animal is almost as dangerous as a wounded one? Well, me and my ape friends are both cornered and wounded. Now, here's the good news. AMC has money in the bank. I don't like the way Adam raised it, but nevertheless, we've got over $800 million in checking. We do have some big bills coming due soon, but I expect interest rates to ease by then, and we will refinance it, God willing. We are closing excess theaters and opening more profitable new ones. We have a completely modified business model that includes new revenue streams like retail popcorn, branded credit card, movie merchandising, and a new distribution business. You guys all know the story. And who knows, maybe even our investment in Hycroft might pay off if gold keeps doing what it's doing. All of the box office forecasts have been revised upwards for 2024, 25, and 26. Theaters have proven to be recession-proof, so bring it on. We don't care. And I don't care what method of analysis you may use or how much debt we're in, I still say the largest movie exhibitor business in the world is worth more than 31 cents a share on a pre-split basis, a price they spent billions driving it down to, in my opinion. Now, as far as our hedgy friends, we're not leveraged to the sky. The regulators and politicians aren't going to be coming after us. They're going after them. We didn't break the securities rules and laws millions of times. They did. We don't have to worry about securities sold yet not purchased, unrealized losses, accounting for billions of synthetics if they exist. They do. Wars, $100 oil, inflation, interest rates, and 1,000 other risks, especially black and white swans, aren't our problems. They're their problems. So join me in laughing at their predicament because they've already done their worst to us, and most of us are still standing. Even if there are only 3 million apes left, if each one only owns 175 shares on average, that means we own this float twice, right here, right now, not including institutions and insiders. So I'll sleep like a baby. Just look at Kenny's face from when this turd hunt started until now. He looks like a mayonnaise sandwich that was left out in the rain for a week. Try to remember, the original bet was AMC is going bankrupt. It didn't, but we didn't get paid. Then they changed the bet to you'll never be profitable again. Well, we were, and again, we didn't get paid. Then they changed the bet once again. You'll never do better than pre-pandemic 2019. But then we had the best third quarter in our entire history, which includes 2019. Once again, we didn't get paid. Adam never mentioned his dilution plans during that call. That very evening it was announced, the strike was over. But I noticed the stock didn't move that night. I thought it was the greatest trade setup I'd ever seen. I thought the next morning AMC was going to explode to the upside. But then Adam dropped the dilution bomb, and you know the rest of the story. What troubles me most about the night before is why wasn't the stock moving after hours? I mean, we just had the best quarter in our third quarter in our entire history. The strike was over. It's almost as if Wall Street knew what Adam was going to do the next morning, but the shareholders didn't. Maybe someday we'll find out. Okay, so let's get ready for next week, guys. Kick back and enjoy the show. No matter what crazy shit happens next, do you really think if you couldn't shake me out of my AMC position under $3, you'll be able to do it under $1? Remember, I will never tell you to buy, sell, or hold any security or cryptocurrency. You do what's best for you, do your own research, and never act on any advice from any YouTubers. Let's kick it off. Investing.com. Top 5 things to watch in markets in the week ahead. All right, number 1, big tech. Big tech earnings are due to start arriving this week after a week which saw the S&P 500 and the Dow register their largest weekly percentage losses since March of 2023, and the Nasdaq posted its largest weekly drop since November of 2022. 4 of the so-called Magnificent Seven group of tech giants will report. Tesla on Tuesday after the market closes, Facebook on Wednesday, followed by Microsoft, and then Google on Thursday. Big tech is crucial to the S&P 500 because these companies hold the largest weightings in the index. Now, if the hedgies are short big tech and we get surprises to the upside on earnings, that's a problem for them, not us. Okay, number 2, oil prices. Oil could soar to $100 on Iran decision. Oil settled slightly higher on Friday, but posted a weekly decline after Iran downplayed Israel's retaliatory drone strike on its soil, indicating that an escalation of hostilities in the Middle East might be avoided. As oil's risk premium gradually unwound, prices fell around 3% last week. Both benchmarks posted their biggest weekly loss since February. Investors, however, are not ruling out the possibility that Middle Eastern tensions will disrupt supply. And don't forget, the Chinese may attack Taiwan, and Chinese hackers may attack U.S. infrastructure. Meanwhile, reports Friday said the International Monetary Fund expects OPEC to begin increasing oil output from July. OPEC members, led by Saudi Arabia and Russia, last month agreed to extend voluntary output cuts of 2.2 million barrels per day until the end of June. That has helped keep oil prices elevated. Okay, so if you watch my last video, Goldman told us the hedgies dumped oil stocks and went long oil futures. So Uncle Frank is hoping for peace, lower oil prices. But no matter what happens, it's a problem for them, not us. Okay, number 3, PMI data. Investors will be closely watching PMI data out of the Eurozone, the US, and the UK on Tuesday for any signs that inflation, especially in the services sector, is returning. Uncle Frank, what's PMI? Purchasing Managers Index, an index that measures the month-over-month change in economic activity within the manufacturing sector, right? Okay, the March U.S. PMI showed U.S. services industry growth slowed further last month along with services inflation. Okay, so we know from Goldman the hedgies are dumping equities and getting short again, so I'm hoping for a cool number here to catch them short. I'm probably not going to get it, but I can dream. And number 4, the Bank of Japan meeting. Why do we give a crap, Uncle Frank? Well, the last time they met, it did move markets, guys. Investors will be on the lookout for clues on timing of the next rate hike when the BOJ releases fresh quarterly growth and inflation forecasts at its policy meeting on Friday. Guys, when you add any drama to this coming Friday, options expiration day, PCE, it gets me excited. BOJ Governor Ueda said on Friday the central bank very likely will raise interest rates if underlying inflation continues to go up and begin reducing its huge bond buying at some point in the future. The remarks reinforced expectations the central bank will raise its short-term interest rate target from the current 0 to 0.1% range sometime this year. The yen has been declining since the Bank of Japan's decision last month to end 8 straight years of negative interest rates as markets focused on its dovish guidance, signaling that borrowing costs will be stuck around 0 for some time. And I saved the big bomb for last. Number 5, U.S. inflation figures and the PCE group of data. Investors also get another look at U.S. inflation data on Friday with the Personal Consumption Expenditures, or PCE, price index, the Fed Reserve's favored inflation gauge, which economists expect to remain elevated in March. Recent data indicating that progress on taming inflation has stalled, along with strong labor market data, geopolitical tensions in the Middle East that have sparked a rise in oil prices, and comments from Fed officials, including Chair Jay Powell, have prompted investors to dial back expectations on the timing of any rate cuts. Okay, that may all be true, but if our enemies are short and we get a cool number here, cooler than expected, that could hurt them, and that's what I want. And now please join me in congratulating my good friends and subscribers, Crypto Carl and his wife, Betty. She scored a 6-figure trade on Shiba Inu. She stuck with her convictions on the coin, and she was rewarded. God bless, Betty. From here forward, you'll be known as Betty, the Shiba Queen. In honor of Betty's spectacular trade, I'm going to cover an article from the Times tabloid by Toby Loba titled, "Here are the top forecasts for Shiba Inu price to reach 0.001. Despite the ongoing market correction that saw SHIB plummet, it remains 107% higher than its price from the same time last year." This article was published yesterday, by the way. This resilience has fueled speculation about SHIB's future potential, with some analysts and market observers forecasting a surge to a seemingly ambitious target of 0.001 in 2023. Speculation regarding a potential SHIB price surge to 0.001 gained momentum. This coincided with increased token burning initiatives and the expansion of the Shiba Inu ecosystem's utility. In addition to token burns, other factors can support SHIB in its journey to this new all-time high. Not investment advice or advisor. One notable factor is enhanced utility and increased adoption. Increased adoption of SHIB for various purposes within the Shiba Inu ecosystem, such as payments and increased use as a real-world currency, could drive demand and potentially raise the price. The successful launch and widespread use of Shibarium, the Layer 2 blockchain solution for the Shiba Inu ecosystem, also plays an important role. Shibarium reduces transaction fees and improves scalability, potentially attracting more users and investors. However, the most important part of the Shiba Inu growth game plan is sustained token burning. Continued efforts to burn SHIB tokens from circulation could decrease the overall supply, potentially leading to a price due to the principles of scarcity. In August of 2023, tech platform CrowdWisdom released a report analyzing the feasibility of a 0.001 price for SHIB. CrowdWisdom's analysis pointed towards the vast circulating supply of SHIB as the main obstacle. They suggested a burn rate of 15 to 20% yearly for SHIB to reach this goal, concluding that the ecosystem would need to burn 95% of SHIB tokens in 5 years. A burn rate like this is a hefty task. However, Times tabloid also delivered into the potential timeline for SHIB to reach 0.001 if the community could burn 100 trillion tokens yearly. So, Uncle Frank, will you share your crypto watch list with us? You know I will. I'm not a big crypto expert, but I do a lot of research in the space. So here goes. Everyone should watch Bitcoin and Ethereum. You already know I'm an XRP freak. I had a successful trade this year in Dogecoin. There's Betty's Shiba Inu. I watch Polygon Matic, Stellar XLM, Hadera HBAR, Flare, ApeCoin. Not really wild about that project, but I like the way ApeCoin trades. It's pretty predictable. XDC Network, Ox Protocol, ZIL, ZIL, LCX, UFI, the Purify Protocol, Songbird, SGB, Brillion, which is DUA, and Pulse Chain, PLS, right? So will you share which ones you own and at what price? Yes, I'm long enough XRP to choke a hippo at an average cost of 0.592, and I have a position in Hadera or HBAR at 8 cents. What do I like about HBAR? Well, it's no secret anymore. It's right in the description. Hadera is the most used, sustainable, enterprise-grade public network for the decentralized economy that allows individuals and businesses to create powerful, decentralized applications. It is designed to be a fairer, more efficient system that eliminates some of the limitations that older blockchain-based platforms face, such as slow performance and instability. I consider it a good playmate for my XRP position. Now, have you guys heard about the Hedera Governing Council? It's a collection of professionals that provide transparency, trust, and governance to the Hedera Hashgraph public ledger. The council is comprised of a select group of companies, institutions, and individuals from around the world that have been chosen for their expertise and commitment to the success of the Hedera Hashgraph platform. Some of the more notable members: Deloitte, Nomura, IBM, Fidelity, Google, LG, and Boeing. Just saying. And from the Theaters Are Dead file, breaking today from Variety. Dune 2 nears $700 million at global box office. Box office sands continue to flow for Dune Part 2, which is nearing $700 million worldwide. Director Denis Villeneuve's sci-fi epic has grossed $276 million in North America and $419 million overseas, bringing its global tally to $695 million after 8 weeks of release. It's an impressive benchmark in post-COVID times. Only 5 movies in 2023, 8 in 2022, and 5 in 2021 managed to cross the $700 million mark. These kind of headlines do more to defeat the short narrative than you may want to admit. Okay, so do you guys think the hedgies and market makers are relaxing and enjoying themselves this weekend? Think again. This is from the last 12 hours. S&P 500 heads for worst month since 2022 as bond yields jump on inflation fears. Something will have to give. IMF issues dire warning to Biden administration. From the Cryptopolitan, the 2020s are about to become the global economy's worst decade ever. And then an important one from the Telegraph. China will stop Iran from causing a global oil spike. Now, why is that important? As I've reported before, we learned this 4 days ago. Hedge funds dump U.S. energy stocks to buy crude options. Hedge funds are selling U.S. energy company shares, believing the stock prices may be due for a short-term decline. They are buying call options on crude oil as a hedge, anticipating a potential price increase due to ongoing geopolitical tensions in the Middle East. This strategy allows them to profit from rising oil prices while limiting their downside risk in the stock market. You see, we're rooting for both. I want them to get bagged on the energy company shares they bought, and I want their calls to expire worthless on crude oil. This Change.org petition is gaining some traction. It was sent to Gary Gensler and 10 others. Ban Citadel Securities and investigate Ken Griffin for fraud. Protect investors' interest. If you ask me, someone needs to investigate Gensler. And would you look at that? Someone agrees with Uncle Frank. SEC hit with new lawsuit alleging mass surveillance of Americans through stock market data. The SEC is illegally collecting data of every citizen who invests in the stock market, according to a new lawsuit. The new Civil Liberties Alliance filed a suit Tuesday against the SEC, claiming that the agency, through its Consolidated Audit Trail, or CAT program, is collecting mass amounts of personally identifiable data by forcing brokers, exchanges, clearing agencies, and alternative trading systems to capture and send detailed information on every investor's trades in the U.S. markets to a centralized database. The agency is doing so, NCLA says, without authorization from Congress and in violation of the Fourth Amendment, which prohibits unreasonable government search and seizure of private information. So instead of keeping the hedgies, primes, and market makers honest, you're monitoring my trades. Got it. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.